Welcome back to my channel. Are you ready to take your financial game to the next level? If so, you're in the right place. Today, we're diving into an exciting, yet often misunderstood topic: how to use debt to actually grow your wealth. Sounds crazy, right? But trust me, when done correctly, debt can be your best friend in building wealth. We've got 10 smart ways you can leverage debt to increase your financial standing, and I'll break each one down step by step so you can start using them today. Let's dive in. First up, let's talk about borrowing money to buy assets that generate income. Now, what do we mean by assets? We're talking about things like real estate, stocks, or even small businesses. The key here is that you're using debt to invest in something that brings in money consistently. For example, imagine you take out a loan to buy a rental property. The rent you collect from tenants can cover your loan payments and even provide you with passive income. Same goes for stocks or bonds, where the dividends can pay you regularly. This is how you make debt work for you. By buying income-generating assets, you're essentially using other people's money to grow your wealth. Tip #1. Buy income-generating assets. Real estate, stocks, businesses. Next up, we have a game changer: financing tools for your work that can increase your income immediately. Think about it. If you're a photographer, investing in a high-quality camera on credit can immediately allow you to take on more clients and increase your revenue. Or maybe you're a content creator and need a new laptop for video editing. Financing that equipment means you can start working at a higher capacity and bring in more money right away. The key here is that the tools you finance should directly help you increase your income and pay off that debt quickly. This is the kind of smart, strategic debt that can boost your earning potential immediately. Tip #2. Finance income-boosting tools. Camera, laptop, tech equipment. Use low-interest loans to pay off high-interest debt. Debt can be a double-edged sword, but here's a way to turn the tables. If you have high-interest debt, like credit card balances, and you qualify for a low-interest loan, consider using that loan to pay off your high-interest debt. This is called debt consolidation. Let's say you have a few credit cards maxed out at 18% interest. If you take out a personal loan at 6% interest, you can pay off all that high-interest debt with the lower rate loan. Not only does this save you money on interest, but it also streamlines your payments into one manageable monthly bill. By lowering your interest rate, you're saving money and potentially speeding up the process of becoming debt-free. Tip #3. Consolidate debt with low-interest loans. Save money on interest. View your credit score as your financial reputation. Alright, let's talk about your credit score. You might think of it as just a random number, but in reality, it's your financial reputation. The higher your credit score, the more favorable your terms will be when borrowing money, whether it's for a mortgage, a business loan, or a car loan. A high credit score means you can get lower interest rates, which ultimately saves you money. Think of your credit score as a reflection of your financial responsibility. If you consistently pay your bills on time and manage your debt well, your credit score will rise. This is one of the most powerful tools in your financial toolkit, so be sure to monitor and maintain it. Tip #4. Boost your credit score. Lower interest rates, better terms. Get tax breaks on your home and business loans. Did you know that some of your debt could actually save you money? That's right. Certain types of debt, like mortgages and business loans, come with tax advantages. For example, mortgage interest is often tax deductible, which means you can reduce the amount of taxable income you have, lowering your tax bill. The same goes for business loans. You can write off interest and some of the expenses related to running your business. So, not only are you using debt to acquire assets that grow your wealth, but you're also benefiting from tax breaks that help you keep more of your money. It's a win-win. Tip #5. Tax breaks on loans. Save on your taxes with home and business loans. Borrow small, fund a side hustle, and it will eventually pay for itself. Here's one of my favorite tips: borrowing a small amount of money to fund a side hustle. If you've ever thought about starting an online store or offering a service, but didn't have the upfront capital, borrowing a small amount can help you get started. Let's say you want to open an e-commerce store. You don't have enough savings to buy inventory, but you can take out a small loan to get started. Once you begin making sales, you can use the revenue to pay off the loan. The beauty of this strategy is that once the hustle is up and running, it'll pay for itself, and over time, it could even become a full-time income source. Tip #6. Fund a side hustle with small loans. Start small, grow big. Fund your first big venture with a business loan. If you're ready to take the plunge into entrepreneurship but don't have enough capital, a business loan could be the key to getting your first venture off the ground. Whether you're opening a restaurant, launching a tech startup, or investing in inventory for your product-based business, a business loan can give you the funding you need. This kind of debt allows you to invest in your business infrastructure, hire employees, and market your product or service. And when the business starts generating revenue, the loan gets paid back, and you can keep the profits. The key here is having a solid business plan and ensuring you'll make enough money to cover both the loan payments and operating costs. Tip #7. Fund your first business venture. Turn your idea into reality. Only take student loans for degrees that guarantee high salaries. Let's talk about student loans for a moment. Education is one of the best investments you can make, but not all degrees are created equal. If you're going to take on student loan debt, make sure it's for a degree that leads to a high-paying career. Degrees in fields like engineering, medicine, and law often have higher salaries right after graduation, making it easier to pay off your student loans. On the flip side, degrees in fields with lower earning potential might not justify the amount of debt you're taking on. Always do the research before committing to a degree program. Tip #8. Student loans for high salary degrees. Engineering, medicine, law. Borrow money to invest, use gains to pay it back, and keep the profits. Here's an advanced strategy: borrowing money to invest. It might sound risky, but with the right investments, it can pay off big. For example, you could take out a loan to invest in stocks, real estate, or even a business. The key is making sure the investment grows faster than the interest rate on the loan. Once your investment generates returns, use those profits to pay off the loan and keep the remaining gains. This is a powerful strategy because it allows you to leverage other people's money to generate wealth, but only if you're confident in your investment choices. Tip #9. Borrow to invest. Use profits to pay back and keep the rest. Use a mortgage to buy rental property and let tenants pay the loan. And finally, let's talk about one of the most powerful ways to use debt: using a mortgage to buy rental property and letting your tenants pay off the loan. Here's how it works. You take out a mortgage to purchase a rental property, and then you rent it out to tenants. The rent you collect from your tenants covers the mortgage payment. Over time, the property may increase in value, and you'll have a valuable asset in your portfolio. Not only are you using debt to acquire an asset, but you're also having other people pay off that debt for you. Once the loan is paid off, you'll have a cash-flowing property that continues to generate income. This is the power of leverage, using debt to create long-term wealth. Tip #10. Buy rental property with a mortgage. Let tenants pay the loan. So there you have it, 10 smart ways to use debt to grow your wealth. Debt doesn't have to be a dirty word. In fact, when used wisely, it can be an incredibly powerful tool for financial growth. The key is understanding how to use debt strategically to buy income-generating assets, invest in tools that boost your income, and consolidate debt to save money. Now, I want to hear from you. Which one of these strategies do you think will make the biggest impact on your financial future? Drop a comment below and let me know. Thanks for watching, and I'll see you in the next one.